Today we had a consumer confidence index, and it was the lowest it's been in 3 years. And the consumer confidence, CCI, represents how does consumers feel about the pricing that's going on in the marketplace. That's what that represents. So CCI represents consumer confidence index that tells us how the consumer feels about what's not CPI. That's the consumer price index. That deals with what we're paying for something. That's judging inflation. CCI, consumer confidence index, tells us how the consumer feels about the pricing that's going on in the market. So here's what we get. The layoff jump in August in hiring in 2024 is at a historic low. The layoffs were at a high and the hiring back were at a historic low in August. So August job cuts surged 193% from July to 75,000, the highest since 2009. Hiring rose slightly to 6,000 but remains down 21% from August 2023. August job cuts highlight economic uncertainty and rising costs, forcing companies into tough layoffs, said Andrew from the Vice P Challenger, right? And they say the trends mirror last year's pressure. The reason why that's important is because I want us to see something else. So watch this. Gold pushes up to 28%. Now, mind you, I have been saying for at least 5 months, buy some gold. So watch this. Gold prices are up 28% in 2024 to $2,660 an ounce. It's up 28%. It's on track for its second best year since 1979. The last time it was at this price was December 31st, 2010. In 1979, gold had a 126% rise. Watch this. I'm going to tie this in. The Federal Reserve, the federal debt is now almost $3 billion a day. That's the interest that they paying on the debt. Watch how we tie this all in. Watch how we tie this all in. The CBO, the Congressional Budget Office, says that it will be around $892 billion this year that the United States will pay in interest payments alone on the $35 trillion debt. It will be $1 trillion by 2025, $1.7 trillion by 2024. The net interest payment will be $12.9 trillion over the next decade. The current payment is 3.3% on the debt. Since 2020, $12 trillion in debt has been added. 2020, pandemic. That is $280 billion every month since the pandemic, since 2020. So we have added $280 billion of debt every month since 2020. Why is that important, Trap? Well, the reason why that is important is because the economy is weakening. How do we know the economy is weakening? Well, because the dollar is the weakest that it's been in a year. The Federal Reserve is now cutting rates. You cut rates because people can't afford to live. They're cutting rates, and the deficit at which America is accumulating is back to World War II levels. Mind you, they went into recession, deep recession. I'm making it all make sense. Just listen to me. Stocks are raising at a rate as if we've already priced in a soft landing. Gold is rising. Why does gold rise? Gold rises because the broader market feels like they need a safe place to hide money. Gold has always been the hedge. Okay, let's go a little further. Bond prices are falling. Real estate prices are rising. Commercial real estate is falling. Banks are now having to put billions of dollars on the side because they have to factor in real estate losses, which is why it is extra harder for you to get some money from the bank. If you notice, it is really, really hard right now to get some money from the bank. there are more restrictions on getting money from the bank. The reason why, the bank is designed to give us money. The bank is designed to be a little not as strenuous when it comes to, because they want us to get money from them. You know we're in a tough situation when the bank says, nope, here is the extra regulations we're adding to give you money. Okay, watch this. Oil prices are falling. Natural gas prices are up. I want us to understand that. Well, Trappin, like, why does all this matter? It matters because the stock market and the economy are not brother and sister. They are first cousins, though. The stock market is designed to go up. And I want us to know this. I'm not saying that the market about to crash. I'm not saying it because I need us to take advantage of what's going on. But I need us to proceed with caution. And the reason why I want us to proceed with caution is because we don't want to be all in on playing the options market, because the one day that we already have learned that we cannot predict when the market is going to belly up. We can't predict it. But I always want us to have cash. This is why the people keep asking me, Trap, are we still in that 2050 range? Yes, we are. I've never told you to get out of it. And the reason why I never told you to get out of it is because the numbers are on the board. We cannot look at the stock market and say the economy is doing well. The stock market is designed to go up. So as people will keep buying to one day people say, nope, it's time to go. And when they say it's time to go, I don't want us to be fully in on some options plays because we being greedy. And the numbers tell us if people aren't getting jobs, the numbers tell us if people cannot afford everyday living, the numbers tell us that we don't know when it's going to happen, but we need to be cautious. Now, in your buying whole plays, hold them. But for the traders, I just want us to be careful. Because the worst thing you can do is be in a trade when the market decides it wants to go the other way for a long time. And with America being $35 trillion in debt, with America being spending $3 billion a day on just the interest of the debt, and with no political candidate saying we want to bring the debt down. That's what I'm talking about. So when I said I listened to the debate, that's what I didn't hear. I heard, yep, increasing taxes on the rich. I heard it. I heard not paying taxes on overtime. I heard it. I heard fracking, right? I heard Project 25. I heard this. But I never heard, here's where we're going, and maybe I'm wrong, I will not switch the puts. I never heard this is how we're going to bring the national debt down. That's what I didn't hear. And so for me, because I didn't hear that, now I'm not like Warren Buffett, so I will not just sit on the side with all that bread. I'm going to still make some active moves. I still want to be able to get the market to print money for me so that I can have bread on the side, right? Taxed on unrealized gains, you got to be worth over $1 million to do that. So if you ain't worth $1 million, you don't even need to worry about that. Right? If you're not worth $1 million or more, you don't even got that to worry about. 100 million. It's 100 million, right? So you don't even have that to worry about. So you can't let people like Grant Cardone, you know what I'm saying, hit you with the, yeah, they're going to tax your unrealized gains. Yo, that's not even your tax bracket. And I'm not saying, let me say this, it's not your tax bracket yet. It's not your tax bracket yet. That ain't what you should be worrying about. Because the people who are in that tax bracket, guess what they're going to do? They're going to find a way to lobby around that. So it ain't for you to be upset about. It ain't for you to be, man, that lady gonna take my tax. No. No. You're not there yet. It's okay, but you're not there. Let them people fuss about that. Grant has the right to fuss about that. He has over $100 million in real estate. That's his fuss. That's his fuss. He's supposed to fuss about it. And he got $600 million in real estate. He 100% supposed to fuss about that. I'm not mad. I don't unfollow him because he's fussing about that. He has the right to fuss about that. But what we need to do is say, okay, I want us to put ourselves in a situation where we can take full advantage of what's going on.